Okay.
Okay.
Okay, good afternoon, everyone, and welcome to the first edition of Financial Intelligence Series in 2026. Today, we will be discussing some valuable insights in the economic space and possibly answer some of your questions. Joining us today, we have Farouk Hassan from the Investment and Research team here at Lotus Capital. He will be walking us through the outlook for the year, and we're excited to have him here. We're excited for his insights. So, Farouk, welcome to the live.
Thank you very much, Anila, and hello to our fellow listeners. It's a pleasure to have you.
Thank you, thank you. So we just started the live, and we are currently waiting for a few more people to join in before we go straight in. But so far, I feel like I like the look you have on your face. You're smiling, you're looking excited. Can you tell us the reason why? Did you pick up any new hobbies over the holiday, or is it the markets that is making you so happy?
Well, um, a bit of both, maybe. Market has not been bad so far. We've got to see good returns, and also it's a new year, really, and with lots of possibilities. So, I mean, there's definitely much to be excited about.
All right, that's awesome, and we are happy to have you here. Like you mentioned, I know you have a lot of things in store for our lovely listeners and followers. So let's get into it. Basically, we just released the economic outlook for 2026, and can you tell the people a bit more about that?
Oh well, the report, which literally just tells us or gives us a way to air our opinion about the global markets and our own, Nigeria economy and what our expectation and outlook is really for the year 2026. And to be very fair, um, we look forward to greater things when we look at the various economic indicators, including the economic growth, uh, the inflation for the country, financial markets, which is where most of us are, are really much more interested in it. And most importantly, how we could also take advantage, of this expectation as investors.
Okay, that sounds exciting. So let's get down to it. What are we looking at in terms of the global economy? We're projecting a 3.10 um, growth rate. This kind of feels close to what we saw last year. What is currently driving this, and what do you think is the outlook for the market?
Okay. First off, I must say that's a very intelligent question. And while the answer is also not far fetched, um, one of the major one of the major factor happens to be the gradual, easing of monetary policies by, major central banks, and the reasons why these central bankers, have decided to ease monetary policy is as a result of inflation, which is now closer to targets. For some of us, that are also engaged in buying and selling, would see that it's not far fetched. The rate at which price changes in the market has slowed down a bit compared to what we had earlier. We've also seen increased investments across the globe in various areas, especially artificial intelligence, which I know most of us, are also consumers of these various artificial AI platforms. I'm sure a lot of us are very familiar with ChatGPT. We've seen every investment in that area on how it could, serve us more or serve uh, consumers better and producers alike. There's also an increased level of automation going on in various sectors, and there's also increased adoption of green technologies. For some of us, would notice even here in the local space in Nigeria, here, see the adoption of electric vehicles. You know, moving away from fossil fuel and all of that, which a combination of all of that is expected to support uh, global and economic growth.
I mean, that's awesome the way you just broken it down. And I noticed that you mentioned AI. Sometime last year as well. I think someone mentioned AI is also helping the growth. It definitely seems that AI is here to stay. What do you have to say about that?
Oh well, you are right. AI is definitely here to stay, and I mean, in some various investment forums, you would have prior to it was not 2010, way back, where the nomenclature around AI was really about it replacing people's job. And I think the new wave, associated to AI now is that it is here to assist you really, and that has actually been the wave on now, and we don't expect we expect saying AI is here to stay is definitely not is definitely apt. in all aspects. Notwithstanding, while we are also looking at developments in the artificial intelligence space, it's also essential to also look at the various tariffs, both in the U.S. market and some other form of protectionist policy that has been going on around the world, which might slow down investment around this area. But notwithstanding, you know, AI is definitely the bug everyone is expected to catch.
All right, thank you for that. And wonderfully said. So, what do you have to say about the inflation globally? What exactly are we looking at in that regard?
Global inflation is expected to moderate, in 2026, and this is literally on the back of easing interest rates, as well as the fact that we expect to also see economic growth. And according to our projection, which also aligns with what various multinational or multilateral agencies are also forecasting, which puts it at roughly 3.6%. This would be what our expectation would be.
Okay, thank you. Just to before we go on, if our audience or anyone followers have questions for us, we'll be happy to answer them. Just put them in the comments, and we'll definitely get back to them. So you mentioned growth, which is everyone wants to hear about growth. What do you think is really driving growth globally?
Well, that's also a good one. In terms of growth, uh, it's a twin combination of lower energy prices as well as commodity prices. For us in Nigeria, to start from a local perspective, PMS prices or fuel prices, literally, we've seen it moderate to a point away from where it's normally at. For commodity prices, we also noticed a downtrend in prices of crude palm oil and other consumer staples. For example, rice have also moderated in terms of price, uh, and when we also look at the supply chain in terms of how goods and services are being delivered right from the producers end to the consumers end, we've also seen some level of efficiency and stability in terms of costs. And supporting this also is wage growth. Locally here, we've seen the minimum wage also being raised, which is also expected to transcend into some other quarters. Uh, so, I mean, really, when we look at these combinations of of this expectation, what one is expected to see drive at would be improved economic growth.
Okay, thank you so much for that. So this is fine as and all good globally and all. Let's bring you home to our base. Let's bring you home to Nigeria, right? What do you think? What's the outlook for the Nigerian economy in 2026?
For the Nigerian economy, our projection currently puts it at roughly 4.20%, and that's basically driven from my expectation of steady growth, and this is also on the back of the various reforms we've seen in the country, stemming from the removal of fuel subsidy alongside uh, unification of exchange rates. We've also seen various policies, that brings home investments, especially in the oil and gas space. We've seen the recapitalization of various, key institutions across the economy, and these policies, which are home driven, alongside um, positive, events within the global space, should project or should position Nigeria ahead of this expected growth, which we currently estimate to be around 4.20%.
Okay, 4.20%. That's not bad. And a lot of things you mentioned there. That some things that stuck out to me is growth, steady. What do you think? What exactly is driving this?
Um, as regards the driver, uh, would like to as I mentioned earlier, this would again be on the back of the reforms. And to break it down, these reforms literally is just expected to expand, to bring about expansion, both in the economy generally and transcend into the capital market. And what do I mean by that? For some of the reforms that have been implemented, is expect the aim or the goal is to attract investors, which we begin to see in various sectors like the oil and gas, healthcare sector. Also, uh, in addition to this driver, would be government spending. It's not just enough to implement policies, but it's also expected to also ensure the economic infrastructure, to carry on or to supplement these reforms to ensure businesses, move on speedily as expected, would also be implemented. And government spending, I mean, the expansion of good road networks, building of more, you hospitals, road, ensuring efficiency across various institutions, right? And institutions, I mean, key institutions like the agricultural sector, the banking, and oil and gas, are also expected to be drivers that would help sustain the momentum.
Okay, thank you. I know you are your big grammar and everything is that's all well and good, right? But what does this mean? Let's bring it home. What does this mean for the average Nigerian? What do they expect to see in the economy that's supposed to help their lives, move around their lives, basically?
In simple terms, what that means would be that people can expect more stability, right? Given the economic reforms that we've seen in the past 2 years, we expect that to deliver, you know, positive macroeconomic outcomes, which we are, beginning to see, right? Key of which is the inflation numbers, which have remained relatively stable. And I also want to agree with the numbers because compared to when these economic reforms were initially implemented, the rate at which prices of goods and services, were changing to the upside at the time compared to now, is way different.
Okay, so something that stuck out to me is stability. You mentioned the what we can expect is stability. So which means what you're saying is, we are not expecting to see any strange spikes or shocks in the economy, right? We don't obviously we don't have any we're not soothsayers. We can't see anything can happen at the same time. But we are basically saying we shouldn't see that. Are we being correct?
Yes, I mean, I would say, while these are just expectations, and are literally forecast, which we, however, suggest we don't expect to see unexpected spikes. We also would suggest to also take to also ensure that downside risk are also mitigated by diversifying. So literally, yes, we don't expect to see unexpected policy shocks, uh, but we should also be cautious of that literally.
All right, thank you so much for that. So what about the interest rates? What's the expectation there?
So for interest rates, on the side of interest rates, we expect interest rates to continue to decline in the year 2026.
Oh, okay. What's behind that?
Not far off. I mean, we've seen inflation slow down. We've seen our exchange rate also has remained relatively stable. And once that has been addressed or regulated by the various authorities, that's the monetary policy authority and fiscal side, what I think would be the focus, right, would be expansionary. monetary policy or economic growth. And the way the CBN can, support that would be to embark on expansionary monetary policy, which would drive the slowdown in interest rates.
Okay, you mentioned something there now as a bit technical. Some people may not understand. If you can break that down for them. What exactly is the expansionary monetary policy?
As regards expansionary monetary policy, as regards expansionary monetary policy, um, from an investment, what that would mean that the CBN, right, would be looking forward to cutting interest rates just to support economic growth. And what that would translate, how that would translate into economic growth is that a cut in interest rate means would benchmark interest rates would reduce. So any rates in the market would pick, would take anchor from that. Hence, as a consumer, right, if you go to the bank to seek for facility, it means you'll be getting it cheaper. And if everybody's getting rates at a cheaper price, you expect consumption to increase. And for the producer, it then means they can expand production levels, right, by getting rates at a cheaper rate, and that would eventually support economic growth. So this activity is what we literally refer to, as an expansionary monetary policy.
Okay, that's awesome. So we've spoken about the global economy. We've spoken about what the Nigerian economy is looking like. So let's come down to the investing angle of it, right? Where should the smart investors pay attention to? What will the smart investor do basically? That's what I'm trying to get from you right now.
Yeah, for from an investment perspective, um, opportunities would be expected to be seen across several areas. However, the equities market is expected to remain more attractive, right? Especially in sectors that are to benefit from um, economic reforms, as well as the expected decline, in interest rates. Notwithstanding, we'd also be watching the fixed income market closely, as yields, as I mentioned earlier, should find that appealing in the near term before rates fully adjust downward. Uh, Notwithstanding, it's also important to also ensure investors. It's also important for investors to ensure uh, their portfolios also mixed, by also incorporating alternative investments that also denominated in foreign currencies, just to help manage risk and preserve value literally.
Okay, that's interesting, especially since people are always wondering whether if it's better to to be safe or take advantage of growth. Let's talk about the equities market. What is the outlook there? What are you predicting?
So for the equities market, in 2026, like I mentioned earlier, it being going to be the focus area for 2026, uh, we are really truly expect it to be positive. And as you had asked, the drivers would be the expectation around interest rates, which we had said, because the CBN wants to support economic growth. What the best approach would be to reduce interest rates, and then reducing interest rates, as I also mentioned, would support companies, support valuation, and therefore result in the equities market performing well. Adding to that would also be improved listings. We also expect to see more listings. We also expect to see more listings in the equities market, right? Improved investors' confidence should also, drive this performance. Uh, for some of the sectors that we are particularly happy about, uh, would be the education sector, agricultural sector, and upstream oil and gas sector. These sectors we strongly believe are well positioned to benefit from the various reforms that we've seen in recent times. We also expect injection of liquidity by investors in these sectors to also boost, performance and balance sheet efficiency. And lastly, would also be the fact that with increased wage, lower inflation, we should see increased demand, most especially from the domestic space to support revenue and subsequently bottom line performance of some of these some of the companies that are listed, in the exchange.
All right, thank you for that. What about fixed income? Are those still an attractive prospect?
Yes, well, there is still a place for the fixed income market, especially in the short to medium term. You know, we had highlighted initially that we expect yields to trend lower. We also expect benchmark interest rate to decline, and which then means current levels that we are seeing should offer attractive entry levels for you know income focused investors. So for hence fixed income instruments that are of high quality, which includes the likes of government bonds, government or sukuk, high quality, you know corporate notes should also be attractive at this moment. While while we expect rates to decline further into the year.
All right. Thank you so much for that. So basically, just a recap for if you're just joining us or you missed a certain things. The global economy is going to increase a little bit. We are also looking towards in Nigeria. We are looking towards a declining interest rates. We have some different industries that we can take advantage of. You should also diversify your portfolio. The agricultural industry is good. The oil industry is good. We also expect stability across board. We don't expect different spikes or shocks in the economy this year. And we are hoping for no major surprises. Thank you so much, Farouk, for your time. This has been an excellent breakdown from your end, and we really appreciate it. And to people watching, if we'll be releasing the 2026 economic outlook very soon. If you want to get it or you're yet to get it, please reach out to your relationship manager or customer care team to get your copy. And if you want to begin your investment journey, please send an email to info@lotuscapitallimited.com or call 0908 705 8405 if you're in Lagos. Call 0809 06 50622 if you are in Kano, or 0908 705 809 if you're in Abuja. Thank you so much, Farouk, and thank you to everyone. This has been an exciting first edition of our financial intelligence series, and we hope that to have you on the rest that we'll have for the rest of the year. So thank you all. Thank you.
Uh, Thank you very much. It's also a pleasure to be here, and hopefully we get to have a wonderful 2026. Thank you all.
Do you have any last words for our viewers and followers?
Yeah,
Yeah, I said, do you have any last words you want to share with our viewers and followers?
yeah. My last word will be, to ensure we take advantage of the outlook we've shared. I mean, it's important. It's while the forecast should not be the driver, but how we tend to use these numbers or the outlook are the most important the most important aspect of this conversation. Having a well diversified portfolio and ensuring that you as an investor stays flexible and also align strategy with your goals, your risk appetite most importantly, and also um, your time factor to ensure that you don't mismatch your expense or when you need your flows with the duration of your exposures. Thank you.
All right, thank you so much. I'll see you all again very soon.
All right. Bye.